Hello everybody, Jackson here from the Wealth Squad. Today we'll be talking about 3 growth stocks to buy now, and I'll give, of course, my opinion and ideas as to why. So be sure to watch the entire video to get all 3 stocks. So first off, it's going to be ROKU. As you can see the charts right here, this is the 1-year chart now, and you can see it's kind of in a range from 320 to 480. So that's a wide range, right? Let's see exactly. So about 50% or 30%, depends how you look at it. So that's the range that Roku's trading in right now. You can see it's nearing the under 30 RSI, and that's a sign to buy, right? Because that's when it's oversold. So we can see the 5-year chart. Obviously, it's going to be off the chart just because Roku's growth recently, since the March 2020 happenings, it's done really well. Since March 2020, let's get exactly here. From the bottom to now, it is up 468%. So you might ask yourself, why should I buy Roku now after it's been up 468%? Well, it is trading at a discount, at a 30% discount. That means you could get, a fast growing business 30% off from when it was trading at a couple months ago, if not weeks. So yeah, this is Roku. The earnings are growing pretty fast. Let's check FinViz. You can see a different chart pattern here that when I just drew support and resistance lines. And Roku is currently on this one. That doesn't mean I'll stop here, but it looks like it will just based off that candle. It went below it and closed above. But it could also hit this 294 line as well. But you can see Roku's earnings, absolutely fantastic. Of course, the valuation is steep, but in this market, they're going for earnings. A lot of stocks are trading at deep valuations, deep as in high, just based off growing earnings, like a super fast growing earnings. So that's why they're buying in. Another stock we should look at is Chewy. Now, Chewy's, of course, like Amazon for pet food, except it's only pet food. Amazon sells everything. Chewy does pet food, pet toys, anything pet related. So you can see it's also trading at a discount. Let's see from exactly. So from 119 down to 72, down about 40%. So you're getting another company at 40% discount. The earnings just happened, so that's why they're trading at such a large discount. Let's check Chewy on FinViz. You can see the earnings growing also very fast, and it seems like the company's doing pretty good numbers, although of course the valuation's very, very steep. When investing in growth stocks, you put the valuation to the side. You're looking at the growth. That's why it's called a growth stock and not a value stock. So of course, keep that in mind when you're looking at these companies, that you're gonna be looking at the growth, not necessarily the valuation. But if the growth is, fast and strong enough, then the valuation might not matter as much. But you can see Chewy trading at a good price now, right around 72 from where it was back in December. Although it does look like it may have some more room to fall. 64 could be a good range to buy in, and it does look like it's in this pattern, although that's just based off 2 different points, so who really knows. Look for Chewy, look for Roku. Next would be Zillow. Zillow would be the high risk out of these picks, just because look at this, right? It was trading at 209. Now it's trading at 91. 50% off you're buying Zillow at. Now the earnings are coming up in November, a month from now, so you should be fine. But it's been falling ever since February. Now, does it look like it might recover, based off 1, 2, 3 points, maybe, just based off this price right now? Let's check on FinViz, see what the earnings are doing. But yeah, Zillow does look to be the riskiest pick of these 3, just because of the large discount. Although that doesn't necessarily mean it's more or less risky, just based off the company, right? If you're buying a stock that's down 80%, technically it's going to be less risky than a stock up 80%, just because you're getting at such a large discount if the company's good. Now, if the company's garbage, then you shouldn't be touching it at all. Hopefully that makes sense. So you can see the earnings this year, positive. Next year doesn't look too good. Doesn't have too much data on here, but the valuation also very steep. Actually, according to next year, that's not too bad considering it was 412. Now it's going to be 84 in the next coming year. But yeah, Zillow, if we check the 1 year, it's below that 50 RSI range, not necessarily below the 30 yet. 5 year just shows this large spike in price, and it's falling back down. Now, will it fall back down here? It could. But based off the earnings, maybe not, right? So these are the picks: Roku, Chewy, and Zillow. Of course, do your own research, do your own due diligence. This is not financial advice, just ideas. Now, tell us what you think about these stocks in the comments down below. But besides that, thank you for watching, and I'll see you later.